Attention, please. The show starts in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, go.
Hey everybody, and welcome back to the Crypto Night Show. Your host Superman in the house. Looks like we've got all our connections up and running, which is great. We did do a live stream earlier. Unfortunately, X wasn't connecting properly, but here we are for a second live show. We've got a different topic though. We will be obviously covering the crypto outlook, but we're going to cover inflation and interest rate cycles as well, because obviously it's currently the next big feed-in, along with oil prices that are jumping. So we're going to talk about that and give our perspective on that. So I hope you guys enjoy it. If you guys are on X, don't forget to hit the repost button as well. And of course, if you're on YouTube, don't forget to subscribe and follow on X. So that's how we roll. If you're loving the daily content, loving all the insights, we're doing the big picture stuff, from tokenization to stable coins to AI agents. It's all happening on the blockchain, guys. You guys are here early. It is going to be transformative wealth over the next 3 to 10 years. And of course, it's going to be exciting. So I hope you guys enjoy it. You guys are here at the right time. There's going to be a lot of changes in the labor market. It's going to be really tough for some people, and of course, a lot of chance for you to bypass all that in the crypto market, right? Because you're in the right asset classes at the right time. So it's really going to be great for you to get your positions in really nice here while we're in this so-called mini winter. And enjoy the golden age of America coming up after Trump is continuing to deal with a lot of key geopolitical issues. And this is long overdue. This is decades overdue, guys. And even though it's giving us short-term volatility, it's an opportunity to pick up some of the best assets because once that all quiets down, we're going to have quite the run as well. All right, so let's see who's in the chat there. We've got Sean O'Malley. Good to see you, Sean. Up only indeed. Welcome. And let's get into the markets here. First of all, let's do the socials, shall we? So if you haven't joined, like I just said, join up, smash the follow as well. Now, if you haven't joined our strategy club and you love daily intel from crypto coming in constantly, while we're joining up the strategy club, we also talk about some key tickers that you might want to pick up as quality opportunities to make the mad gains over the next year or two. Then definitely join up. The strategy club's amazing. Get in there, just over $1 a day, so really, really well priced. And we also have general Discord membership too, which is $12.50. So you can pick up one of those. Very, very cool. So you can see the QR code just below me on the video there, or you can find the links in the video description or pinned at the top of the X profile. So join up today. We'll see you there. All right. Without further ado, let's kick into the oil prices right now where we are. We got West Texas at the moment at $94.72. It's up about 8.6%. We got Brent oil up $100.37. So back at the 100 mark again, up 9%. So the market's still a little bit, fear on reports that Iraq tanker attacks had occurred. And of course, we know that CENTCOM there for the United States is basically dealing with that issue. It's going to be very short-lived, guys, honestly. You're going to have the Fifth Fleet in there. The Fifth Fleet is trained for this exact situation for the Strait of Hormuz and taking control of it. And that's what you're going to see happen in a very, very short space of time. They've already been obviously blowing up a lot of the ocean miner ships designed to mine the Strait on behalf of Iran. And they're also looking to take key positions along the Strait of Hormuz. It's only about 21 miles, I think, wide, but they're going to be, closing down all that stuff along the coast there. The other big thing that people may not be aware of, there's a big tank terminal island that Iran uses. It's basically it's cash, it's cash tap there. The US may very well land on that with special forces and take that over. And that would stop the cash flow into Iran, right? So that's a really just squeezing the ultimate squeezer with the money there. And so look for that to happen too. It is really going to be shut down pretty big there. We got Frank White in house there, Bang Bang Pulse Gang, big shout out. We got Sean O'Malley in there as well. Great value is the strategy club. Yeah, it is really great value, guys. So join up today. It's not an investment club per se, just a strategy intel, but we do look at a lot of top tier tokens, but have tons of crypto intel and inflow along with economic stuff as well. So it's well worth getting in there. All right. We also have great strategy chats as well, so you can ask away lots of cool things. All right, so we got oil prices still elevated, but hey, look, I've got the weekly chart here, and that spike that we had back on the 9th of March, we went up to about $120. That's all come back. We are rising a little bit now on the fear of tankers, but like I say, I'm not expecting too much alarm here. I'm expecting the Fifth Fleet in the US to really close down all these risks that are there, right? And typically, they're going to be left with little drones and little arm things. A lot of times those guys try and shoot off, they're going to probably be killed within the 5 minutes, right? So it is going to be shut down, I think, pretty quick. Obviously, there's stuff going around insurance and all the rest of it, and of course, maritime patrols as well. Guiding oil tankers through. So that's kind of where I think it's going to be pretty short-lived. We are expecting the US to continue to really bomb the heck out of Iran over the next week because they're just continuing to take out all the hardware, right? They're leaving. Obviously, they love the civilian people. They're trying to protect everything. Israel did bomb some oil stuff, and that caused a bit of drama. The US has pretty much asked them to stop doing that because they obviously want a civil society to flourish, and they don't want to take out all those important oil places as well. So, what they will end up doing is probably just taking out the cash cow island, that big terminal there, and closing, controlling the tap. That's the best way to do it. And then hopefully, we'll see. At the moment, we've also seen a lot of US taking out military, the army. So the army is really the big thing left. I mean, obviously there's more drones and stuff out there, but the armies are really what's left. A lot of them are sleeping outside of their bases, sleeping in hotels. Already we've seen some of the officers targeted in hotels with precision strikes. And we already see videos coming out from Iran overnight of civilian uprisings in certain areas. So it really will be the power to the people. Remember, over 80% of the people don't want the Ayatollah conservative Islamic rule, which has been absolutely brutal, particularly over the last month or so. They've killed tens of thousands of their own people. And so we've kind of seen that happen. So, there's issues on the streets where the civilians are rising up in certain areas. Iran's obviously a very big country. I think the population's about 90 million. So it's a very big country. You've got a lot of ethnic groups in there as well. Obviously, it's Persian underlying culture. And so that's kind of where we see. So hopefully we'll see a people uprising and move back to where Iran was back in, I think it was 79 or something like that, 69. So that is what we're looking forward to as a modern, Western country. Probably be a lot better than a lot of the countries in the West because we've got the onslaughts of progressives that are destroying the West, right? So it's they may end up way better off. So we do see countries like all the other countries in the Midwest trying to move to a modern society with using the oil to diversify and modernize. We do see a lot of that happening in Kuwait, UAE, etc. And really, Trump's helped them to move away from terrorism, supporting terrorism. It's been a slow grind. I mean, you're still getting stuff coming out of some of those countries in terms of building, terrorist stuff in the West and that. But apart from that, Trump has really helped lead them away, and they've really wanted to go away, right? They really wanted to, flourish. Also, get rid of the Shia-Sunni conflict, which has been ongoing, and move into a safe, prosperous environment, and that's exciting to see. Now we've got a face on the West, and hopefully we'll get that happening in the West to some degree. We've got a lot of work to do in the West to make sure we get our freedoms back, because we've got Marxists and globalists trying to take away our freedoms and enslave us, right? Which is not much fun. It's in the past it was always we were the good guys, but unfortunately we've got a lot of bad guys in the West now ourselves that we're dealing with, right? Wish us luck. That's all I can say. So that's kind of where we are with the oil there. Now we do have obviously inflation, and this will cause impact GDP a little bit as well. Just even though it's short term, I'm expecting it to be short term. It will have some impact on GDP with the oil flows. The whole process of oil flows. Saudi Arabia's got their own pipeline as well that takes something like 5%, 10% of the oil, I think, that's going through the Strait of Hormuz. And so on. So, this is pretty big. Now, obviously, this has much bigger implications around the Chinese. Get a lot of the oil through from here and etc. All that sort of stuff play out. But we're not going to go too much into the geopolitics of that at the moment. So let's jump into the inflation data that came out today. We had the CPI Consumer Price Index, and that came out. That is, all inflation measures are rather crude. They're kind of just been around for so long. They typically are a basket of goods, right? We have, a nominal CPI. We have core CPI where we take out, key items. But at the moment, we had our results come in, right? So we had the forecast was 2.4%. Last month, we got 2.4%, and this month, we got 2.4%. So inflation is met expectations, so that's a good thing. Anything that meets or is lower is beats expectations is good. So we're at 2.4%, and we've got relatively low inflation. I mean, it's not too bad, 2.4%. And we've also got the next indicator coming up for the Friday is the core PCE price index, right? So that's currently sitting at 3.1%. We got 3% last month, which was lower than better than expectations. So that was cool. What will we get this month? Will it be in line with what we're seeing with the CPI? Probably will be, is my guess. Maybe it'll be slightly better. That would be good news. And so we've got the two key inflation indicators, particularly the one on Friday, which is the preferred gauge for the Federal Reserve. And that is a more broader gauge of inflation. It's got more stuff in it. So we'll see what happens there with that. So that's coming in on Friday. And so we've had, two big things, the oil spikes, and then we've had the inflation. And inflation seems to be coming in at expectations or better, which is good news. And also, which means interest rates can come down, right? That's the idea there. The other thing we saw was last month, we saw employment surprise to the downside, right? We lost 75,000 jobs. Now, that's going to move around a lot. And also, people will be quick to assign AI changes, which is definitely happening in there as well. We've also seen under Trump a move from the public sector, I should say, losing jobs there, trying to create jobs in the private sector. And that has a double win, right? Because the private sector is more productive. And of course, the public sector, you got the deep state, right? Full of Democrats and, trying to do all that crazy stuff, right? So it is a double winner there. And that's kind of what we're seeing. All right, so that is kind of that. So that means that the Fed's got three different items. It's got the oil spiky things going on, but I think that's going to subside fairly quickly as the Fifth Fleet takes control, and of course they're well in the process of that. And secondly, inflation's relatively low, and employment's to the downside so far. And so this would mean that our meeting for the Fed rate monitor, which is happening in 6.5 days on the 18th of March. We've got the market still expecting a no change at 99%. So still expecting no change. However, we should be having rate cuts. We should be having rate cuts, and the market is seeing it a different way. We should, at the moment, we've got the federal funds rate at 3.75. We should have the rates pretty much close to 1-to-1, right? So we should be having it, not 3.75, but closer to 2.4. And even if you wanted to be a bit more conservative, you could at least move it down by 1 percentage point, 100 basis points, and that would put it down to 3.75. 2.75. So just above the inflation rate at the moment, and that would be between the PCE. Now, let's say you want to be more conservative and you wanted to come down the PCE rate. Well, that's around 3%, right? So you could even still come down 75 basis points and match that 1-to-1, which is a good rule of thumb there. So I do think that the Fed is keeping rates up too long and too high for too long. Now, remember last time they said inflation was going to be low, and inflation ended up being high under the Biden's administration, and because they were spending and fraud and corruption and all that stuff. And so they had the fastest rate rise ever, and it was all too late, right? All too late, and then it was harsh on the U.S. economy. And the only reason really why Biden had a good employment growth was due to Trump's policies around the tax bill that they had from the Trump period. That's the only thing that really kept Biden up, and so he could spend all this money, right? That's kind of the play there. Not deal with anything, not deal with the trade deficit, not deal with the federal budget deficit, not deal with the public debt, right? The three big items which Trump has hit head on in the first year. And we're going to probably see a lot of cool things happening over the next year or two around those three different items being dealt with. Obviously, trade deficit already having some role there, and also the federal deficit as well. Now, that is some of the cool stuff happening there. So we'll see what the chair has. Obviously, we have a problem with the chair because Jerome Powell's a Democrat, and he's been playing silly games as well. But I just don't think he's that great at his job also. So there we go. So let's have a look at April. We got 90% for no rate cut as well. So we're just going long with high interest rates relative to where inflation and employment are. Now, obviously, with the oil price spikes, they'll be arguing, oh well, we've got to wait and see what next month's results are, right? But this is relatively short-lived, and it will only have a certain impact on the economy. And I think it's going to disappear very quickly as well. So I'm not really expecting it to be too much. There'll be a little impact, but not too bigger impact on the inflation there and GDP, of course. So we got inflation, and we got expecting no change in interest rates, only 10% of the market. We'll see whether that PCE result on Friday, when that comes in, impacts that as well, whether we get some changes in these numbers. But we're all going all the way out to June, and that's the first time we're starting to see, a part of the market, 30% of the market, expecting a rate cut. But the rate cut's only 25 basis points. So it's even a low amount, right? So that's when we get to June. And now this is the end of Jerome Powell's period, right? Is June. Then we'll have a new chair, and I think it's Wash, I think is the one they're going to have. And then we've still only got 36% of the market expecting a rate cut by July. So this expectation seems really off. I mean, these expectations of the market are really off there. And obviously there's a bond market taken into account as well. But it's not, even in September, we're not expecting a rate cut. 40%, most of the market's still expecting 75. Well, if we add up the other expectations of 50 basis point cut in September, then it's definitely a majority of the market. But I think it's all going to happen quicker than that. And so I think we're going to see quite a few changes in these expectations and the actual change by the chair, right? So keep a lookout for that. It's way too high. And what this is doing is suppressing GDP and employment in the United States, right? By keeping up so high for so late. And that hurts the American people, right? Obviously, Trump's doing so many awesome things to lift the US economy, and that's going to give high GDP. But we could have a whole extra point or 2 points of GDP on addition if interest rates were lower, and also benefit people with housing mortgages. And if you know California, Texas, and places like that, I mean, the markets have been through the roof in a lot of places. And it's very difficult for people to pay for their mortgages, right? So, the cheaper they are, the better. And that's what Trump wants trying to get down as well, not just to flourish GDP and the likes, but actually to make the burden on homeowners a lot cheaper. All the best for that. And by pulling back all the immigration, you got to remember that he's been doing, he's easing off the housing market for Americans. So that's a big deal. We see that everywhere in the West, right? A shortage of houses and massive flooding of immigrants coming in, and the whole society goes into the dogs, right? The hospitals, you can't get in hospitals. The waiting time, you can't get doctors. Traffic driving to work every day is horrendous. I mean, the list goes on, right? Utilities go up. You bring forward utility costs. I mean, the whole thing is just bad design. Bad economics by liberals and progressives. They're the ones that screwed up the West in that case. And Trump is the last man standing almost to reverse that, right? So certainly the one with holding the most power. And so we're lucky to have him in place for that. All right, so that is the Fed rate monitoring right now. So we'll see whether those numbers change. Obviously it's too high, too long. And of course, what's the outlook there on Bitcoin then? What's the outlook for Bitcoin? Let's have a quick look at the chart right now and see where we are. Now, we obviously have a lot of fundamental things happening within Bitcoin itself. And then we have the big, macroeconomic picture, geopolitics picture as well on top of that. We've got the Bitcoin right now at 69,420, trying to battle to get over 70K, right? This is the daily charts. And we've got the 50-day moving average at 72. This is rounded off 73K right now. And we got the 200 moving average at 88,388, obviously coming off the all-time high. Now, how far down are we? Let's go to the weekly candles and have a look how far down we are from this retrace this time round, right? Now things are changing. We are having structural change in Bitcoin, and we came all the way down to that wick to 52%. Right, we came 52% down, not 70%. People, calling, 70, if you're 70% another leg down. I don't know whether we're going to get that. Maybe we get it in May. Maybe we get it later in the year. But it's looking even less likely, guys. Less likely. Now, what's some of the big players that push this down? Well, obviously all the OGs, right, with tons of Bitcoin that they bought super cheap. They were, they're up 100x, right? So they're selling down. They're definitely key players. We obviously had, shorts taking over, market manipulation as well. Lots of things that happened to help make this chart go down, and particularly during the red candles there, right? And so that's definitely occurred. Now at the moment though, we're back up from that 50% move, and we're currently only down about 45%. So we've gained 5 points there, haven't we? Gained 5 points off that decrease from 52%, or 7 points almost, to 45. Now the question was, are we going to have another waterfall down? Now some of the things against another waterfall down is that, and I covered this earlier, is Michael Saylor and Strategy are doing something profound at the moment. They're really attacking the money market with their preferred stock of Stretch. So that has been performing like a boss. So recently they announced their last week's purchases of Bitcoin now, and they have increased by 18,000. It was unbelievable in a week. They've really stepped up their strategy since February with Stretch, one of their preferred stock offerings there. And it really addresses the money market. They are eating the money market. The traditional finance is being eaten alive with the bond market, money market, private credit, all being eaten up because they're offering 4-7% at best, and you're taking a lot more risk with that. And yet Michael Saylor here is offering like 11%. It's completely gutting the traditional finance. And this is something that people were just starting to wake up to over the last week or two. People got real surprised with that $18,000 buy. Now, this week, it could get up to 30,000 Bitcoin. Oh, my goodness. These are big numbers. And this could really help structurally set the floor. So Michael Saylor himself, he's been on these interviews. People have been bagging him about, being below costs, having unrealized losses. But here we are. His Stretch is really ramped up there. In fact, it's doing about a third or something like that of the total purchases. They're still doing at the money or at the market purchases through MSTR issuance. So they've got these two, MSTR and Stretch, going on. But Stretch, I think, is going to start taking over and is generating about 2,000 to 2,500 buys, 2,500 Bitcoin buys a day. And remember that the Bitcoin miners are doing about 400 or 500 in mining a day. So it's already like 5 to, I don't know, maybe even up to 10x the amount of purchasing going on versus the miners being created. So it's definitely a net buyer in the market, and it's becoming significant. And that's only going to grow. I think that's only going to grow as he basically vampires the traditional TradeFi markets for money market and bond market. And remember, these are hundreds of trillions of dollars, these markets. So it's a big deal going on there. And it's taking people by surprise, people that are not, keeping a good eye to the ground there. So really is really exciting. And we're seeing, nice little strength of green wheat going on at the moment, right? 69. And that's during war. And with our oil elevated too. So we're getting a little bit of back to that store of value type idea. Obviously, that was got hit quite hard when gold rallied, and digital money generally was being priced down, and Bitcoin with it, right? But it's starting to get back a bit of that store of value attitude right going on right now. And we've also got obviously fundamentals like Strategy here in their Stretch product really starting to print buying. And this comes back I think about 2 years, 3 years, or maybe even 5 years ago. I can't remember when the post was, but Michael Saylor was saying, imagine, I think it might have been 2 years ago. Imagine a big whale that just kept buying more than was being mined. And this is where we are now. This is today that we're here. We're here. As you realized. And the Stretch product, it seems like the holy grail. In fact, it's just come up to I think a 3 curve, which is unheard of, and that means that it is really working really well here. So that's a really big sign there, and we're back over, as you can see on the weekly here. We're back over the 200-day moving average for Bitcoin, so 68,273. So we're back over there. We're fighting over the 70K mark. And with Michael Saylor's product here, every day it's doing this now. It's just crazy. Are they going to do? Are they going to announce a 30K buy for the week? Between Stretch and MSTR. MSTR going to Stretch going to continue to take over as proportionally and more efficient, more effective than at the market buying, right? Which is when you're raising capital once the MNAV, because they got an MNAV about 1.2, so it's pretty solid, right? From for strategy, and so you can at the market that value as long as you're over 1-to-1, right? But the Stretch is even more efficient, even more attractive, and we're seeing big buys even coming into the Stretch product. So as it takes over, it's going to be hard. Why would you go for 2, 3, 4% up to 7% with private credit markets when you could get 11% on the back of Bitcoin? It's just getting more attractive. People, it's just more self-fulfilling, more flywheel, and so that's pretty exciting. Now, obviously, they've got about 738,000 Bitcoin. What are they going to have in a couple of months' time at this rate, right? It's huge. They're going to get up to grinding 150K Bitcoin a month. It's huge. And so that people were almost laughing. How are they going to get to 1 million Bitcoin, which is the target? Well, at the moment, it looks like they've got the mechanisms for doing it. So we're going to keep an eye on this and the momentum. But it's definitely looking pretty amazing. And there's trillions of dollars to be targeting here. Trillions of dollars on these money markets. So game on. All right, so that's kind of really some really powerful stuff going on, and so that is a structural shift. If that maintains itself, it is a structural shift, and every Bitcoin that Saylor gets is not being sold, right? So that's the play, and so it's just accumulation there, and it just helps price go up forever. So keep a lookout for that. So what I'm saying is we can always get down to 70% correction. We can always do that. If a big enough players sell, it's definitely possible. But all things equal, this is giving us really good support with the old Bitcoin here. So I'm really liking what I'm saying with the old MicroStrategy there. Now, as you guys know, we're going to have a look for Ethereum as well. Let's have a look for that. So we're going to go, we'll go ETH as well. Let me just change the tickers here. As you guys know, we've also got, Bitcoin's not doing all itself. MicroStrategy is the number one digital asset treasury. It's not doing it all itself. We've also got a Bitmine Immersion now as the number one Ethereum, a DAT, also playing a leadership role, a winner takes all role on Ethereum. Now, obviously, with Michael Saylor targeting the private credit markets and the money markets, bond markets, as a big turning Bitcoin into a big, or at least the MicroStrategy or strategy into a big credit offerer, we now got Ethereum DAT moving into the space of actually, one might be so bold as the new monetary system by itself, but actually is leading finance from TradeFi over to DeFi into the blockchain on Ethereum, and that takes multiple forms from DeFi itself, DeFi, dApps, through to staking, through to stable coins, through to tokenization, which is going to be massive, and that's just bringing the whole monetary system over to the blockchain. And everybody's saying it's going to happen, right? BlackRock's saying it, the SEC is saying it, the CFTC is saying it. The White House is saying it. It's just growing by the day. Now, obviously, a key enabler for that is going to be the Clarity Act coming up. So that's why that's so important to have the market regulated, so that all the players that are on the sidelines, like a lot of CEOs that are not necessarily ambassadors of crypto yet, but looking at it and watching it grow, but still not on board, right? And it's not regulated, so some of them are, they can't do it by the constitutions and other things. But once the regulations in there, it's all part of the risk portfolio, right? The risk management portfolio for companies, and they can start accumulating things like that. So that's really important with the Clarity Act. We're watching that very closely, and that's the chances of that moving around a lot. We've got to get it done this year because if we leave it to the Democrats and by some horrible miracle the Democrats ever win the midterms there, then that's a bad thing, right? We lose one of the house there that makes all the laws, right? So it's very important that we get that through. Hopefully we'll get it through by April, March there as well. I know they're really working hard to try and push that through. The battle is between the banks, right? The banks over yield, and they like to protect the yield. So, and of course, crypto is going to, destroy banks on yield, right? That's the thing. So their best bet is to partner, and that's what we see happening, right? We already see Visa. I think Visa, Mastercard, already partnering with a number of crypto companies because they see it as the best way of winning the game at the end of the day. So we're seeing a lot of those partnerships happen. We already see Kraken and the NASDAQ around tokenization, offering 24/7 stocks with the Kraken exchange. So we see these partnerships happening, and that's really probably the best way forward for the banks slash crypto, right? We already see Morgan Stanley coming in, things like that. So we've got lots of stuff happening on that front. We've got a lot of banks resisting, a lot of banks wanting to protect their yield, etc. They take all the profits, and crypto, of course, the participants typically get a decent whack. Instead of getting 1% at the bank, you get 5%. In crypto, that's kind of the play there. And so that's kind of where we are right now. Obviously, we've got some masterful things happening here. We've got structural things happening. The leadership for BitMine Immersion, of course, Tom Lee being a TradeFi guru through Fundstrat and Fundstrat Research, having one of the top liquidities as well on the market out of the top 5,700 companies, is in the top 150, top 125 in terms of liquidity. And that means that if you've got a liquid market with high turnover like that, you can actually $1 billion turnover, you can actually raise capital. And that's what we've been seeing happening with BitMine Immersion. But they've increased their cash position, right? Because they're looking to time the bottom of the market. They've indicated that the 14th would be the case, and they've got about $1.2 billion up from 850, which is enough at $2,000 Ethereum, which is close to where we are now at 2031, to actually buy 600,000 Ethereum. Now, we know that they've been doing a lot of off-the-market deals and on-market deals. They're trying to get, obviously not push the market too much against them. But we've seen over the last couple of weeks them go from 45 to 50 to 50 to 60,000 ETH purchases for the last week. So not only we're seeing BitMine, for strategy, raise their go up to 18,000 Bitcoin for strategy on their Bitcoin side of things. On the Ethereum DATS, or digital assets treasury for BitMine, we've seen them pick up 60,000 ETH or 61,000 ETH last week. And that looks like they're gaining momentum, right? So they've also released, Tom Lee was very generous in releasing the fact that they thought that the bottom of the market would be the 14th, which is only 2-3 days from now, all right? So that's huge. And so we could see over the next week some significant buying. Now, I'm not suggesting that they use all 1.2 billion, and they may have more cash by this time over, raising that every day, but actually using the at the market mechanism, but actually making significant buys. So instead of 61,000 ETH, maybe they go to 100,000 ETH. Maybe they go to 120. We get back to the 100,000 ETH. That's a pretty significant signal of where that BitMine immersion is going, right? So it could be pretty exciting, guys. So we've got some really, really powerful stuff happening from these digital assets treasuries that are very important in changing the structure of the Ethereum and Bitcoin, and also moving it up. So we could see quite a nice little bottom in there. Now, Tom Lee is also expecting potentially another 20% drawdown later in the year. He doesn't really give us a timing of that. But maybe it's May, maybe it's in the second half of the year after we've had a bit of a rally. But he is expecting March to be a bit of an up month, and then April to be a pretty good month. And then maybe May could be the, sell, go away, sell in May thing, sell in May, go away type thing. So we'll see what happens exactly there. Second half of the year should be pretty good for crypto. If, we get geopolitics out of the way, and we've got prosperity coming in from all the policies from last year. Tax policies, economic policies, etc., then we could see some really big numbers coming in through the rest of the year. That's only going to fuel crypto in the 26, 27. Obviously, we've got the midterm, so we've got to take that into account too. So here we are with buying off at a pretty cool drawdown here on the old Ethereum, but we're going to get some major purchases from BitMine. Imagine 600,000 ETH, guys. That's huge amount. I think the exchanges have something like, last time I checked, it was about 16 million. So, 600K is pretty big. Now, how he buys that, of course, is another question. There's also the chance that they can also buy, do M&As, right? So, we're expecting to buy Ethereum, but they may also buy some other companies, right? They've got the 5% moonshots. He's also talked about doing some M&A, some mergers and acquisitions. So they could potentially take over other DATs, like smaller DATs. Obviously, SBET is the second biggest DAT in Ethereum, and they were going to play their role. They're playing a role in DeFi right now. So we have a lot of these other DATs not doing too much, or they really didn't deliver on their goals. But we do have the top two DATs in Ethereum doing a lot of stuff. Particularly, Bitmine will be the leader there, right? It's not just leading in as a DAT, but it's going to be bring TradeFi over to the blockchain. And it's not just bringing TradeFi over, it's also going to bring the retail market over through Mr. Beast, right, and other means. So it really is clever play. And this is exciting times. Tom Lee's talked about this being a 10-year play, so he's got a 10-year horizon for this. And that, of course, that's mass adoption as well as institutional adoption, and it's game on, right? The whole money system there. So pretty exciting stuff happening in the space on there. So yeah, let's see what happens over the next week, and we have that bottom in. Obviously, we've got the interest rate numbers. Let's assume there's no change in the interest rates, which the market's kind of priced in, right? It's expecting that no change. Therefore, a big buy, some buys over some weeks with Tom Lee up and up to the right, up and to the right. So that could be pretty cool with some significant buys there. Excuse me. So at the moment on the weekly, we've got we're quite a different picture from Bitcoin, and therefore I think Ethereum's a lot more compressed, but the upside for the economy of Ethereum is so much bigger than Bitcoin, from my view, and we could have quite a significant re-rate there on Bitcoin, on Ethereum versus Bitcoin at some stage, and it may not be too far away. The fundamentals are going really well. The price has been suppressed for quite a long time on Ethereum, and here we are, 2032. We've got Tom Lee with a lot of cash, and all the institutions are coming in to back Bitmine, and they see the big picture. I always say, he's on the phone telling them a bit of the secret sauce about the big picture, and they are coming in strong to get positions of Bitmine while the retail was selling. They're coming in. So at the moment, we've got $2,031, and let's see, we've got the weekly 200 at 20, just under 2,600 there, and the 50 weekly there at 29.40. So I think we're going to get a nice little V recovery. We always get these V recoveries, right? Every time we get a V recovery, it's not always perfectly smooth, but essentially we get that V recovery. You can see last time, V recovery there, and it just keeps going, So V recoveries, this keeps coming on here. So we've had a pretty big move down there. Let's see what it was. So back in 18th of August last year, all the way down, we had a 65% move down, even more aggressive than Bitcoin's 53%, 65, not too far away from 70, right? So that's a pretty big zone. We also, if we have a look at this, let's get a little bit of drawing out here too. Let's pull up a box maybe. Let's see where the boxes are over here. And, we've had a lot of good zone here between, I don't know, probably that and 1500. Let's see here. So, this zone right here has been a great accumulation zone. I mean, look at it. Accumulation all the way through and all in here and in here. So we're sitting up pretty nicely, but we've got structural changes going on, right? We've now got a DAT. The DAT, Bitmine wasn't around in June last year. It had its first 250 million raise, and just inside, 8 months, it's already the number one holder of Bitcoin, 3.75% of Bitcoin. It's got enough cash to buy another 600,000 Ethereum we're talking about, and another 600,000, and that would get it over 5 million, almost 5.1 million, and that puts it up over 4%, right? So it's huge, 4.3% or 5% or something like that, and it's heading towards 6 million ETH, which is 5%. Now, I have heard Tom Lee talk about the potentiality for doing up to 12% of the network and not ruining the network effect, right, for that. So I don't know. They hit 5%. They're going to go to 10%. It's definitely within their reach without impacting the network itself by having too big a player dominating. But actually, 5% definitely look like a strong target. And remember, they're going to onboard a lot of the TradeFi institutions as well. They've got their Maven product coming out probably by the end of March, is our guess. Supposed to be early Q1 sort of this year, and that's going to be a big institutional help, right? Not just Ethereum too. They're doing Solana, and I think what's the other chain they're doing? I've forgotten the other chain, but they're doing another one as well. So that's going to be pretty significant as a bridge between TradeFi and DeFi. So exciting times, guys, exciting times. And then later in the year, we're probably going to get these apps coming out from Mr. Beast and Bitmine. And what services will they have on there? I've speculated that they potentially will have direct buying of Ethereum or at least Bitmine on there with BMNR. And so that could be mega, and that would adopt all the Generation Alpha, Generation Z through Mr. Beast, right? So that could look out for all that stuff. They're going to have financial education on that app as well, on the Step app, because Mr. Beast bought Step earlier with the money that Bitmine Immersion essentially gave them. 200 million it was, and that was pretty cheap, right? Because Step used to be worth billions of dollars, a couple billion. And they got it at the bottom of a sort of recessionary prices, right? Everyone's always after that. If you ever watched Grant Cardone, Mr. 10X, it's all about, he tries to get things that are pretty cheap like that. Pick up existing products. He never likes to build stuff and get it under stress or something like that, so that you've got all the upside. Not only with the cash flow, which he likes, right? Cash flow is king, but also with capital gains, right? Now, talking about Mr. Cardone himself, it was a little bit off topic, but he's been recently talking about grinding up to 10,000 Bitcoin, and he's been packaging that with his property deals, right? Gets a discount on a property on paper, and he has that money, his differential, he puts into Bitcoin and ties it in with his property packages, and then he gets all his people that watch him go and invest in his products, right? So lots of stuff happening around crypto that people are not too familiar with, but these are all accumulating more Bitcoin, more Ethereum, right? It's pretty game changer stuff there. So that's kind of where we are. Will we see the bottom of the market? Obviously, Tom Lee indicating the 14th there, and that was from Tom DeMark, right? The timing guru that is hired to advise Bitmine Immersion, and we've definitely seen an uplift in their purchases, and they could give us pretty nice green candles, depending on how they're going to do it. It'll probably be trying to do it, keep it so they're not putting too much price pressure, but we'll see where they pick the bottom off there and head over 5 million ETH. That's going to be pretty fun to see. All right, so that's kind of where we are right now. We're certainly in the zone regardless of that, but I think we're having structural changes in Bitcoin and Ethereum with these DATs. These DATs are really changing the game and giving a lot of price support in different ways, right? So Michael Saylor through credit, and then Tom Lee through finance. And it's completely crazy, right? So it's going to be pretty amazing. So it's going to be fun. It's going to be fun. All right, so that is some of the stuff happening there with the old Ethereum. And for those that are on Pulse Chain and that, because we always talk about Pulse Chain is going to benefit, right? So it's going to benefit from the increased volume, increased valuations, increased cross-chain transfers. We obviously got Liberty Swap out there right now doing some amazing stuff around privacy trading, intent-based trading, wallets. And today they announced the internal stablecoin swap is available. So really, really exciting stuff from Liberty Swap. And this is they're really leading the way there. I think inspiring a lot of the other top tier protocols to do great stuff too. So it is really, really good stuff happening there. And so we should benefit from a lot of that stuff. We should also benefit, of course, if you're in the camp where you think Richard Hart will use the ETH from the sacrifices at the very least, let alone other access to other capital that Richard's probably got, is that will all get re-rated with Ethereum. So Ethereum starts getting up, up to 5K and breaks out, and then we get up to 12K, we get up to 22K, as some of the numbers Tom Lee's talking about. And we get up to historic ratios between Bitcoin and Ethereum of about 8%, 9%. That's where we get up to the 22K mark. Then all these assets are worth a lot. The sacrifice is worth a lot, and you can pump a very thin chain with a lot of capital, right? So it's going to be pretty exciting to see all that play out too, and Liberty Swap set up perfectly for that. So lots of good stuff happening in that front. And that would probably also lift the values of, Pulse Chain generally, and of course the liquidity forks, the DEXs on Pulse Chain, DEX aggregators, all getting uplift from that too. If this is the bottom for these markets, probably it supports the idea that we're at the bottom or near the bottom at least of Pulse Chain, right? We've obviously had 5 zeros. We're holding on to 4 zeros last time I checked. So it could be game on from here. So some good stuff happening there. All right, so that is some of the big picture items. We obviously got a lot of other entities that are creating value, tokenizing stablecoins, Circle with stablecoins, They're booming as well. We've obviously got a big stuff happening in that space. There's lots of opportunities to diversify a crypto project, portfolio amongst these top indicators. So you've got Bitcoin, Ethereum, Solana to some degree. Solana's a little different, but nuanced around the security side, but definitely around payment rails, tokenization. That will be a pretty big growth area. Or not just meme coins. I think they'll go beyond just meme coins and things like that. And of course, you'll have a few other chains that will probably do well. Maybe Sue Chain, a few others out there. Obviously, some of the majors will also get uplifted, right? But you have to relatively, which will do relatively best, and those some of the plays there. And of course, Pulse Chain being a full system stake fork of Ethereum should get uplift there too. What I would like to see on Pulse Chain is to try and get, if we get, I don't know who it's going to be. Richard's probably in the best place, but if we got something that could lift us with a major protocol, obviously Liberty Swap's really pushing trading and privacy, and I really think that can really explode. I know they're going to do a lot of marketing. They've kind of indicated they're going to be doing this marketing thing, so they've definitely got financial backers in the old Liberty Swap there, and so we'll be watching out for that promotion once they've got, because they've got so much products that they've launched and they've got more to come, and it is really frontier DeFi stuff, and they just need more and more eyes on it, right? More of the big players with big capital to move. It could be pretty exciting there. And obviously, it's a perfect venue for Richard and Magic Cartwright to transfer money over and start buying up. Now, we also know they've got Liberty Lend coming too, right? Not just the wallet coming, the ZX wallet, but actually the Liberty Lend as well. So you're going to have potentially, I guess, private traders being able to lend and buy up all sorts of markets on Pulse Chain. So it could be pretty good. But I would like to see, maybe some alignment with the Genius Act around stablecoins, something like that. But we need some big cash players to do that, right? We need that to get up to 50 million or so, or something like that. So and get more notable. Now with Liberty Swap, of course, we could get Peacock as the #1 meme coin if that heads to $1 billion meme. If it's got, if the holders hold and the value keeps going, the buy and burns keep going, then we could see that as a potential candidate to put Pulse Chain on the map as well. So there are a couple different avenues that may get us there, let alone the general drift in the market to the upside. But definitely it looks like we're in this accumulation zone right now, and it's a good place to be. Now, by July, I do think things are going to change for the Federal Reserve with the new chair, and we'll probably get that interest rate cycle will continue on to the downside. That's only going to be good for markets. I think we're going to get a rotation out of gold as well, back into crypto. They're not the same users, but there's certainly a share of that gold market, the crypto market, and they'll come back. And then, of course, we'll, probably to a smaller degree, silver, much smaller market, but silver to a smaller degree. But actually, quite a big rotation into crypto I'm expecting to happen. And with these DATs leading the way and really harvesting the money markets and bond markets and harvesting finance and helping facilitate these guys, because they don't know a lot of stuff about crypto and tokenization and everything. They're going to help them do that. And you can see we're really vampiring the old TradeFi market. No wonder the banks are resisting this yield game. They know that they're going to find it very hard to compete with the speed and innovation of both CFI and DeFi up against that. So it's going to be a fun game to watch. In the meantime, while you're watching that fun game, you can make mad gains. And as I say, it's a lot more challenging in the workforce these days with AI and other stuff going on. We've got robotics coming on soon, so you won't even need a lot of people for a lot of jobs. And with Tesla Optimus 3 coming out, it's got 21 of the 27 hand movements that we have in our hands as humans, which are amazing. They're going to have 21 or 27, essentially making them competitive with a lot of human actions. And of course, with these advanced chips and AI, now getting to the point where they can do a lot of stuff. Now, I don't think it's quite there. I think there's one more generation after. It's probably going to be the real humanoid versus human battle. But certainly, we could see, a lot of people finding it difficult to get jobs, right? Particularly in skilled and unskilled and corporate job, all across the board there. It's going to be quite challenging. I think some of the better defensive ones will probably still be engineering and things like that. But actually, a lot of the stuff that people say, well, it's a pretty crappy work. Well, you're going to have some humanoid do it, some humanoid robot or something do it, and it's going to be nothing to them, right? So we've got some interesting changes happening in the next few years as we transition, because it's definitely here, right? You guys, I don't know, depending on how old you are, you probably wouldn't remember, but back in the 80s, they were always talking about robots coming in the 90s and 2000, and it was going to be, robots are going to take over. Well, look out 50 years later, basically, 40 years at least later, and we're only just at that point where it's actually looking like it can actually happen, right? So we've got powerful enough chips like Blackwell chips. We've got the code, the AI code. We've got the robotics getting to the point where they actually can be functional. I'm not talking about the manufacturing robots, talking about humanoid type robots. And it is now looking, you can combine all those along with battery packs. We've got the copper lithium battery packs, and advances there happening with some of them with almost infinite cycles now. And so you combine all that together, and you've got Terminator. You've basically got Terminator. But you get my point. It's going to be a pretty crazy time. And each generation that grows up, Generation Z, Generation Alpha, they grow up in a different world of technology. Assuming the world never, doesn't blow itself up with war, they grow up in a new level of technology, and it's quite insane, right? Quite insane there. Imagine growing up where you grow up and having one-to-one robot with humans. It's just the way it is. So pretty crazy. Now, bring that back, of course, with AI agents. AI agents is one of the big things that's going to bullish for crypto, because they're going to have to use payment rails on blockchain, right? And they're going to need a ID from a human to do that. And so, humans are going to have all these AIs, agents working for them. And no doubt they're going to have to pay tax eventually, right? It'll be taxed, definitely by the left, right? The left will definitely want to tax the AI agents. And that's kind of some of the places we're heading right now. So, yeah, it's going to be a pretty crazy world. And at the moment, we've got all these fundamentals, stablecoins, tokenization, AI agent economy, creator economy, all coming into the blockchain. And at the moment, we've got this beautiful accumulation zone that's been around for some time, all the way back since February 21, the last bull market, back up here. And it looks like Ethereum is way undervalued, right? And this is why Tom Lee is so bullish. This is why Tom Lee is going all in, and he is going to be the key guy to lead the transformation of TradeFi finance over to the blockchain and DeFi, right? CeFi. And so right now is a bargain around this $2,000 price. Now, the question always is, will we get down to the bottom of this range around 1,500? That's a question mark there. Tom Lee indicating possibly 20% correction later in the year, but where will the price be at that time, right? Will the price be back up at 4,000 and 20% correction? I mean, when will this happen, right? I mean, that's a question mark there. But at the moment, he's already indicated with Tom DeMark, the 14th could be the bottom zone there. So keep a lookout. We've already seen an increase in purchases, already signaling that they indicating the bottom there with increased cash as well raised. And so we could see some pretty significant rises here in Ethereum. And of course, it's all going into the main treasury debt for Bitcoin immersion. So game on here. Very exciting stuff. So I hope you guys enjoyed it there. What else can we say about this market? Obviously, we're looking forward to really good golden age of America economic data to flow out. And hopefully we'll see that with definitely in the second half of the year, because Trump essentially will have some form of control or influence over the Fed. We'll have a proper Fed hopefully in play with the new chair leading the way for that interest rate cycle to continue down, at least down to the inflation rate, right? That'd be something. And that was lift GDP, lift jobs, lift incomes, and add to already all the bullish stuff that Trump's been doing around trade, supply and demand tokenomics, and also we'll probably see some action on public debt. He's also teased about direct tariffs, direct taxes through the Fed, actually wiping those away with tariffs, right? We'll see how that plays out. But that could be something that would be a game changer too, not having federal taxes. So we'll keep a lookout for all those sort of things. The other big things we've got coming up this year, guys, a lot more money coming back. So we've got the tax refunds, right? We got no tax on tips, all that sort of stuff coming back to the consumer. The American consumer is a giant, right? And Trump is trying to make them even more wealthy. and taking the pressure off housing costs and all that sort of stuff, bringing costs down, trying to raise income. So you're getting this big gap, this disposable, discretionary income going up in the United States, making it even more powerful. And so that makes people a lot better off. So we are expecting to see these economic data coming in, and people doing much better there moving forward. AI, of course, is the big threat there, and people will have to adapt to that, right? We'll have to adapt to those changes going forward. So yeah, some exciting stuff happening with the old markets. So that will all fuel, a boom in the markets. A lot more wealthier people, a lot more refunds coming in, and we may even get that refund check from the federal income as well with the old tariffs. So we'll keep a look out for that. And yeah, game on. So yeah, we should have a safer world, a more prosperous world, and a more freer world under Trump. And of course, that means that all fuels the crypto market. So we'll have good supply economics, good demand economics. We'll have good money market policies. Essentially, by the second half of the year, July onwards, hopefully, we'll have the regulations in place for crypto, and we've already got the tax extensions and tax improvements. It's all set up, guys, for the mega run. So exciting times ahead here, guys. And we should see that transfer over as well. Now, we know Richard Hart's talked about $10,000 ETH, so we know that's probably a key trigger for him, maybe around using some capital for Pulse Chain, but he can do all sorts of things at any time, really, if he wants to. So we'll just keep a track of all that stuff with Richard Hart as well. Obviously, he's been focused on marketing, on reducing inflation and dumpability on the chain. So we look forward to seeing, potentially some acquisitional periods as well, God mode candles, maybe even all that good stuff. So lots of stuff to be there. I'm still pretty optimistic about the Pulse chain. We did still see some hex dumpers, some large whale hex dumpers seem to find hex out of nowhere. So it's keeping a taps on hex, even though hex has got thinner liquidity. But certainly, I think there's big opportunities there moving forward at some stage as well. So we're getting there. All right. What else can we say? I think that's probably it for the day. I hope you guys have enjoyed today's content. If you guys want to get more of the stuff as every day as we're looking at more stuff in crypto, I'm posting it in the Strategy Club. Definitely well worth getting in on that. You can see the QR code there. You can zap it on your phone. Just over $1 a day to join up. And of course, we also have a general Discord membership at $12.50, and we have a great bunch of people in there. We have Crypto Helpline. We have all the resources in there as well. We've got some resource channels, as well as an amazing community. I think it's about 1,000 something people in there. So definitely well worth joining up, guys. And Strategy Club is exclusive in there, so get in on that too. What else are we going to say? You can find all the links in the video description, pinned to the top of X. If you haven't subscribed on YouTube, definitely subscribe. If you're on X, don't forget to hit the follow. And yeah, we'll look forward to seeing you guys again tomorrow. And yeah, we're back on X. So that worked well. Don't know what happened earlier today, but it's been great to be back. So accumulate, guys. You can see the zone. Tom Lee might be making some pretty big buys and putting that bottom in. He's trying to get the market right. You got to get the market right as well with your buys to set that bottom and maybe get moving here. But still holding over 2K. So exciting times ahead. All right, take care, everybody, and I'll catch you on the next one. Bye for now.